Hey, what's going on, guys? Welcome back to Way Up Trading. Today I want to go over and take a look at what's happening with the SPY, some key resistance areas that actually were hit, as well as some support areas that I expected to fall through. Things are right now looking a little iffy. In this video, we're going to be going over what I expect to see over the next several days, some opportunities to make some money, some of the volatility that's coming up, as well as some of the key news and macroeconomic things we need to be aware of in order to make the best out of the next couple of days to the next couple of weeks right after this.
How about that stock market?
All right, we're going to start with the 1 week chart for the SPY, and just want to go ahead and point this out again. We've talked about it on past videos, but I want to go ahead and point it out once again. Taking a look here, we have the 1 week chart up, and basically what we got is a break, just recently, a break of this line that I've been tracking now for quite a period of time. This is the bottom of the 2008 crash that took place just around the beginning of 2009, and this is a line that's been actually trending obviously for the last 10 plus years, and every time we've gotten a bounce off of it, we've either rallied, broken below it, we've jumped down pretty hard, which is what happened right around COVID. Once we broke back above it, we bounced very heavily. We also can see another bounce here right just about the beginning of 2022 or 2021, where we got our push last time around to the 430 mark, and you can see on several different occasions we were able to cross it, and we had pretty relatively strong squeezes or drops where this line has been respected. And just recently, in this past week, just around the actual debt ceiling news that came out this past Thursday or Friday, we went ahead and broke that same area after playing this broadening top pattern for quite a little bit of time. I'm going to go ahead and zoom into a closer time frame to get an idea of exactly how things look from this point and why we're seeing the price action we're seeing. So I went ahead and pull up the daily chart to get a little bit of a closer look on what's happening. This broadening top action has been in place since about March 14th after we got our big push, and we've been playing the top and bottom side of this particular wedge or broadening wedge pattern, which is an ABCD setup, and we had a partial decline. So you can see this A, B, C back roughly around May 2nd, our drop down on May 4th, which is the D area up to level E. That fifth location is generally where the broadening top would basically be completed. What we had here at that particular point was another drop, which is a partial decline, which is a call for a bullish reversal to the upside. We then drop and lose and play the bottom edge of this wedge, and we went ahead and reversed right back up, found support roughly around the 416 mark before taking off, obviously shrouded around some news. But from a technical standpoint, this broke through the yellow line, which is again that 2008 trend line we've been tracking for quite a while, and we're able to break out and above this broadening top pattern, and now I've actually created another broadening top pattern once we actually went in touch just around the 429.60 or 429.70 mark and coming back down. Now, after the debt ceiling information came out during this past week, we're able to catch a very, very large play on some zero DTE contract calls. Did very, very well on that, and that's what actually caused us to jump all the way through this broadening top pattern on the larger time frame, which is the daily, and now start to find us in this newer pattern, which is again a broadening top. This includes the after hours session as well, so we get a clear indication and as much information as possible to make the best informed decisions on plays that we can take going forward. So right now you can see that we had the ABCD set up. I'm going to consider this here roughly on Monday's price action to be the A section. We went ahead and hit B just recently, or the after hours, and also into today's action being Tuesday the 6th. I believe we're going to now start to head upwards towards the 430 region. Possibly, if this takes a little longer, I can still see us hitting our support level or the resistance level that I have marked here as 432.55. So this may be dragged out a little bit going into some key macroeconomic factors or meetings that are coming up, including FOMC. I expect this to most likely drag out in an upward fashion, being that the FOMC will be coming up next week. Maybe most likely, it could also most likely trade sideways up until that meeting takes place. But I am seeing continued upside based upon the trend, as well as what's happening with this particular pattern. We can see what it did for us in the past on the daily, and I expect it to play out the same on the smaller time frames. Now, a lot of folks right now are looking at this from a macroeconomic perspective, where liquidity is most likely something that's going to be needed. I'm not seeing that in the charts right now. This is actually still showing a bullish continuation. I can still see this thing moving up. It is very volatile. Obviously, there's a lot of volatility going on within this time frame within the June OPEX, which is a known thing. A lot of up and down movement between a lot of sales, a lot of buys, as well as the old saying, sell in May, go away, still playing out. The June options is not just a monthly option expiration date, but it's also a yearly. So there's a lot of things happening on a volatility perspective with this particular time frame that we're in. So it's going to take it day by day. I'm actually entered back into calls at this particular time. I'm actually in 432 calls as well as 430 calls for the end of this week. We were able to play some 0 DTE to the downside today. We were able to make some good money on those, but I'm still looking into most likely seeing those higher numbers on the SPY going forward in the next couple of weeks. Granted that we have a bullish FOMC and rate hike decision coming up next week, as well as CPI data coming in. So a lot of information coming in next week. The chart's still showing that there's a possibility that this can go up, but we do have the looming blow off top that everyone's been waiting for. And I think we may be heading towards it depending on how those things turn out with the macroeconomic perspective on the key pieces of data that are going to be coming out early next week. Now we're in a 15-minute time frame just to get a better idea of what the upcoming action is looking like, and you can see we had our several crosses today, as well as continuation looking like for the after hours time frame, and we were able to go ahead and retest the 200 moving average. We had our optimal level here. This is a bearish pattern off the ABCDE, and we went ahead and tested the 426.60 before bouncing, which is basically, it was hit yesterday afternoon and also bounced off of earlier today before us making our new ascent here to the stage C, or letter C here, which I'm expecting us to hit around the 432 mark, most likely tomorrow. So the calls that I'm in, once again, are 430 with the end of the week Friday expiration date. I expect these to start to move and start to pick up some steam as the days go forward. Some of the blue chips are actually moving really well. Amazon is out of this world right now. It's moving really solid. Tesla rebounded really well after dropping down to about 213 and now skyrocketing back up, already touching about the 420 mark as we speak and holding solid. I'm expecting Tesla to do somewhere around the 425 mark, the 225 mark going forward in the next couple of days. Apple was carrying the market with the new augmented reality headset that came out or is looking to be released into the market very soon. And I believe a lot of the sell-off that we had as of yesterday was attributed to the fall off of the new Apple all-time high right at about the peak. Things started to take a downside. Obviously, Apple is heavily weighted in the SPY, and we saw that downshift yesterday after the new all-time high on Apple took place. And we're pretty much just recovering from that as in this particular case, I believe. So we're going to see the market's still a little bit choppy, still unsure. Volatility is going to be the name of the game in this case. So we're going to play the charts as we see them. I don't think we've hit the blow off top yet. We do still have a ways to go. I have a target right now. I'll show you the targets. So on my daily chart, I have this bearish bad pattern still forming and putting this in place. Once we cross over 422, we did go ahead and break that at 2008 trend line, as I mentioned, and we are now heading towards our older target of about 432.57, which is this purple line here in this top pattern. So I do have that's still listed. If we can go ahead and break that, my next and optimal level off of this bat pattern would put us around $443.52 if we go ahead and break that. Now it all depends, again, like I mentioned before, it's going to depend on what's happening with the FOMC, the PPI, CPI, all that good stuff that's happening next week. If we do start to get some bullish momentum and those are bullish, we see some type of a pause, any hint at a pause, anything of that nature, this thing is going to take off and we're going to start to see a full-fledged bull market take place, even though it doesn't feel like it based on the macroeconomics of what's happening in the United States and so on and worldwide. The chart still says bullish to me. If you're not bullish at this particular point in time, you know, I hope the best for you, because right now this chart says bullishness all over it up until a certain point. We're all waiting for that blow off top to happen. If it does happen, you know, we're going to be in position for it. We're going to keep a look at this thing day to day to make sure we get the best entries on the way down so we can make some money on this thing in either direction. So right now, so far, it's still looking like it's bullish. Blow off top is not happening just yet. In my opinion, this is going to carry a lot of other stocks with it. Tech is moving really well. So let's just continue to watch the charts and make the best of the plays that are at our hand, which is all pretty much bullish calls. And yeah, we're gonna get money together going forward. Volume is still steadily increasing on the way up here from the 420 lows of about 394, and volume is steadily increasing still above the signal line on the daily, and it's again still looking bullish. We have a little bit of a decline here on the way down with the downward pressure, but you can see that this is now starting to pick back up. There's not much to say besides this is still bullish. So we're gonna play calls. Watching calls, make sure you're protecting yourself. Make sure you have your stop losses in places. If you're up, make sure you're using a trailing stop. Do what's best for your portfolio, and make sure you're making money on this whole thing. Opportunity is only going to be here for but so long, so take advantage of it to the best of your ability. If you like this type of content, make sure you go ahead and like and subscribe. I'm going to be here every single day on the way up, making the outcome income for 2023. Looking forward to the next video with you guys. Talk to you soon. Peace.